Okay, Jesus, you know. Sorry about that, guys. I hate stuff like this, you know. Spend all morning getting ready, making sure everything's set up right, and then platform crash. So, I think the Tasty Trade platform had to update. I'm on 2.15 now. I was on 2.14 when I started my first broadcast. So, apologies for that, but hopefully we got all that straightened out. You know, you can never really have a crashing show and expect it to run reasonably, so looking good across the board overall. Slight rallies are pretty good for our portfolio. The Coinbase trade still kicking along here. ARM, pretty much the big loser for today. Very well may turn this into... Oh, well, that's different. So look, yeah, they highlighted these bid and ask spreads up here, so we don't have to take a look at that. I will go ahead and probably turn this into a short strangle at some point. It's looking profitably to do that now. Some thunderstorming going on here as well, so we're getting all kinds of stuff today. Just apologies in advance if I lose power or anything like that. I am going to go ahead and pull the stream up on my other window here. Alright, so with that said, yeah, with that out of the way, I'm thinking we may go ahead and add some bullish deltas. Not too sure where we're going to go next with some of these trades, but Palo Alto creeping closer to 340, and again, this 350 call, happy to sit on it. As you can see, we're profitable anytime this guy moves up. We got about 72 shares. That's what these deltas are, shares or risk exposure, essentially. So anytime that's rising, we're happy. And look at this, Dell and Micron knocking on the inverted strangles we have here. Dell only about $10 more before we are back in the money with the inverted strangles. So really looking to capitalize on some of the reduced deltas. And yeah, as of this point, we will be profitable on our trade, at least in theory, approximately $20 from 125. So, you know, that would be 105. So a couple more bucks, and we are in the clear as far as what we are obligated to do on Dell. Meaning, we're not really in a big hurry for this to get back to, you know, 125. Because if we take a look at this inverted strangle right here, and I'll just show you this. Remember, we're obligated to buy Dell we don't own at 125 from somebody else who wants to sell it to us and has the right to sell it to us. And we are obligated to sell Dell we don't have to somebody who would like to buy it from us at 115. So, it is equally bad if Dell shoots through the roof. You know, let's say Dell puts chips on a NASA rocket or something and they skyrocket to 182. That's equally bad for us. Because now we not only, you know, now our obligation to buy Dell at 125 isn't worth anything. Because whoever would want to sell Dell to us at 125 could do it for 185. However, the obligation, the simultaneous obligation to sell Dell we don't have, you know, at 110 is going to hurt. Because we don't have it. We'll have to buy it. We have to buy it at 180 and sell it at 110. So just think about it like this. We have to buy Dell at any price above 110 and then immediately sell it for 110 no matter what. And we have to also buy Dell at 125 and potentially be selling it for far less than that, although we're not obligated to. I know that's kind of a lot of mental gymnastics, but hopefully that explains why I'm not in a big hurry for Dell to rally, and you can kind of see the delta's cooling off here. We're only long about 21 shares of Dell, and we are going to be officially short Dell, well beneath our 125 strike, actually. We'll be short Dell at about 109, so not too much longer here on Dell before we're kind of short, and the reason I'm getting a little nervous is just because we are so far from expiration, but this trade has just been all over the place. I mean, if you look, again, I know I've covered this in some previous segments, but on the order chain here, Dell's initial price, you know, us being obligated to buy it at 125, Dell getting as low as 90-something. Yeah, 94.06, so not good. This trade's gone against us in just about every way possible, and we are clawing our way back from the gravestone. Other than that, looks like the market is having a little bit of a sell-off here. Tesla not having the best day. The Q's going negative slightly. But that's all good, you know. ARM really having a good day here. I'm going to see if maybe there's some news around ARM or something like that, because the rest of the index is not doing so well. So we'll just wait for this to load. I'm just curious. I don't know or follow ARM really in any capacity, but yeah, geez, this financials page is taking forever to load. Let's just Google it real quick. Let's see what we come up with. Let's see. Intel sells stake in UK chip designer ARM amid company-wide restructuring. Okay, so Intel had a stake in ARM, and they sold that stake to better their financial position. So that could explain the price movement. Yeah, again, you know, we're just gonna follow the taste of trade mechanics. We're not going to adjust until we're tested, and then we can just start rolling the untested side. We got 37 days to go. We're capturing 14 theta a day, and we still have a 64% chance for this to be totally profitable at expiration. So, not too worried about this yet. It looks ugly. You know, in theory, we're down 500 bucks, but, you know, again, the best part about option selling is that time is working for you. You know, as the time progresses, this is 21 days where we'd roll this out, and that's, you know, half of what we're down in theory. So, you know, we can keep doing that. We can keep rolling this out. We can turn this into a strangle if we want to. Those are all options that are available to us. But let's see if the market accommodates us. Yeah, it does look like the rest of the indexes are beginning to sell off here. That's going to be good for our short delta-based trades. Our coin trade has some short delta to it. We're obviously short the Qs a significant degree here. But I'm happy that we're seeing some profitability, maybe some, yeah, volatility decrease. Ivy rank down to 31. And let's see if we have Ivy rank on this chart. Maybe I took it off. But we'll go ahead and add IVR in. Oh, they changed the indicator page too. Alright, well, I'll have to mess around with this later. In the meantime, though, you can Ivy rank at 31 is a decent Ivy rank for selling premium. We got in at the top of the VIX expansion, which is one of the reasons that this trade has gone so well for us. If we take a look at the market state snapshots, we put this trade on when the Qs were about 450, and they've gone against us up about $10 to 461, and despite being short delta all that time, we're still doing relatively well on this option, all things considered, having sold it for 329. It is underwater at 543, but like I said, the Qs have been going against us this whole time, so that decrease in volatility is really helping us out here. Yeah, market's kind of cooling off a little bit. I'm not really surprised. You know, people are probably taking some profits off the table, and frankly, if the markets don't go anywhere, if you hit a stopwatch and freeze things where they are, I'm totally good with that. You know what I mean? As an option seller, if you're collecting theta, if you're collecting premium, that's fine. I am totally fine if the markets don't move anywhere. That's good for me, and that's one less day I have to worry about. CrowdStrike, I can't believe I'm saying it, but we're almost back to even on this trade, and I mean, what a shocker that is, right? I mean, if you view the market state snapshots here, we put this trade on at 280, it plummets all the way down past our initial short strike of 210, gets tested at 208, we roll it out, and here we are, you know, just about back to even, still in the fight, and a long ways away from 200. So I'm pretty happy with how today's gone, all said and done. I do want to see if that REIT that I placed, yeah, it does look like it is down to 228, down 6 cents. Sock'em Capital Core Sachem, Sock'em, I don't know how to say that, like Rock'em Sock'em Robots. Anyway, yeah, keeps selling off slightly. I'm good with that. I really want to place more short delta, but this rally has kind of flattened our deltas out a little bit, so I'm not keen to take the short side just yet. I want to see some more indicators that this price movement is going to slow down. But I mean, just look at the index. Look at the price action it's had. If you got long in April, you're happy. If you got short in July, you're happy. If you got long, at the beginning of the month, you're happy. But this is a pretty volatile chart, all things considered. I mean, just to give you an idea of the magnitude of this move, we were testing, the lows from May. So from May all the way to July, we rally, and then we're back down to our progress in May. So that little dip there, which is not little at all, erased about 2 months worth of progress on the index. So yeah, I can imagine why some people got a little jittery about that. Let's see. Anything else in the portfolio hurting? I don't think so. Our biggest delta position is ARM, and that's obviously ARM on the short side, Palo Alto on the long side, and those are our biggest gainers and losers for today, respectively. And Palo Alto might do it. I've been saying for these last couple shows, it's fine if we get that 350 test. It might get there, man. Up $5 today, and our 100 shares are worth about $2,000. But again, just remember, for any new option traders watching, the obligation to sell the shares at 350 is going to be worth either something or nothing at expiration. I know that's clear as mud, but what I mean is it's either going to have intrinsic or extrinsic value. So if we just fast forward this timer here, and we go all the way to expiration, look, 1 day to expiration, the obligation to sell Palo Alto at 350 is only worth $450. You fast forward that 1 day, that obligation's now worth about $60. 60 cents on a contract, but $60 total. And by 0 days, it's worthless, right? So the stock has 9 more days to get to 350. Now you might be thinking, well, geez, this thing's taken forever to get to 0. This option has taken so long to lose its value, and part of the reason for that is that it's right behind this earnings announcement here, August 19th. So we have 5 more days of the 9 days in this contract before earnings, and truth be told, I would be pretty happy to let my shares go at 350. If we get another $12 of movement here, that's going to be great for me. I'm going to get to keep all the premium. So really, the buyer needs this to get to 350. And this loss right here, this is all in theory because the option is still worth something. If we have to sell our shares at 350, then I'm taking my options here, which are synthetic stock, and whatever cost basis I got that at, it's probably $30. I think I got Palo Alto around 320. So if it gets to 350, man, I'm good with that. You know what I mean? I am definitely good with that. And there's a chance I may even roll this option out farther out in time. So if we buy this and then we sold the equivalent 350 option in the next cycle, that's $4.45. So that's an additional $4 in downside protection. We could even play around with this, get 47 cents in protection, and kick our obligation out to 360. So there are a number of ways we can go about this. I'm inclined to maybe keep this 350 going into earnings. We'll see as we get closer what this is worth and maybe what I'm willing to do with it. But Palo Alto, among our biggest winners here, and probably one of our only consistent long holdings throughout the year. I think I bought this back in February with the Nancy Pelosi hype, and I've been sitting on it. It's having quite the day here, up, just roughly. So 10% would be 33, 5% would be about 16.5. So 16.5. So yeah, I mean up about 2.5, maybe 3%. Approximately. No math guru. I'm no Julius Spina, but yeah, looking good on the portfolio other than that. So Bitcoin probably having a bit of a pullback. If we look at where's BTC at? It's probably on the default here. Yeah, Bitcoin US dollar down about 1.5%. So that's good for our Coinbase position. If Bitcoin tanks, we're going to be happy campers. Probably closing this 150 put out at about 21 days to expiration. It's really been helping with the cost basis. We may roll it to the 30-day to expiration cycle, pick up a little bit more credit, or we may even decide, you know what if we want to kick this out all the way to 65 days, we'll pick up 430, we'll lose a little bit of theta, but we'll gain some deltas as well, so we can neutralize that trade in that manner. Also, that would give us a little bit less theta and sort of neutralize things. With a cost basis of 1239, we can get that cost basis down even further to 433. So there's a lot we can do with coin. It's one of my favorite stocks to trade just because the premiums are so crazy on it. In theory, now I've been on the wrong side of coin a lot. This call skew here, if you look at 195, the 200 strike is worth about $20 and change. We'll get rid of this so you can actually see. The mid price is $19.57. If we go $5 to the downside, the mid price is $18. So just to show you again, 5 away from where it's currently trading, $20 and change. 5 away from where it's currently trading, $19 and change. Historically, coins had significant higher call skew, so the risk to the upside is actually worth more. And so, trying to capitalize on that, I've definitely found myself in a jam or two, for sure. But yeah, this 420 put right here is doing some serious work on our strangle. We did turn this short Q call into a strangle, and it's doing marvelously. We're profitable on the trade now, 26 bucks, 23 theta a day. This trade's looking like it's going to be really, really good. A little pullback here wouldn't hurt. We could get down to $1.42. So yeah, if we could get down to 440, I'd be really happy with this. But I'm not gonna leg out. We put the trade on for a reason. I did actually transform this into a strangle to pump the brakes. And the temptation is of course to leg out of the put, but legging out hurts you more than it helps you. Wow, Palo Alto on a tear and ARM, not so much. This day could turn out to be very good for us. Tesla down, not a surprise. I've got that 135 leap, and we'll just hold on to it. We're getting 2 theta a day. The capital requirements on it aren't bad at all. And I'm happy to buy Tesla at 135. 135 is all the way down here at this low, low of 138, so the April lows for Tesla are where I'd be obligated to buy it at, and I'm good with that. So let me know if there are any topics you want me to cover. I'm just kind of going through the portfolio and kind of going through my process here. Like I said, I am over allocated, so not looking to place too many new trades right now. Just looking to maintain what I've got. A lot of my inverted strangles are right where I need them to be. VST between 75 and 85. The inversion I have on in XBI is probably doing rather well. Where's that at? XBI 96. Yeah, between 94 and 102. And I think I have, the Dell and Micron inversions we already covered. But yeah, nice recoveries on the portfolio all around here. And just a good day to take some of the volatility out of the market. I bet you the VIX is down. Yeah, down 78 cents to 17. So the VIX went, look at this. Look, the VIX spiked from 65, which has only happened 5 times in history, all the way down here. So as an option seller, I was happy to just scale my portfolio in, and the P&L is definitely showing. I'm sure that my P&L has risen significantly despite the initial spike. I mean, when it spiked to 65, I woke up, I was at a lake house, I was on vacation, and I woke up to a $11,000 loss, and my portfolio has since recovered because I placed so many trades that I was just able to get out of for swaths of profit. So yeah, very happy with how this one's gone. This 185 option, we paid the man $21, it's worth 10. And the 165 and 150 puts working, doing their best, giving us that positive theta here of about 5 theta a day. But here's the interesting thing on what's essentially kind of a Frankenstein ratio spread now. As we continue to, we'll switch that to theta. So you can see here, we have some positive theta, but as time progresses, we're actually going to have less of it because that 195 put is just going to take away so much theta. So, you know, as time goes on, our profit range is pretty much going to get closer and closer to our intended target. You can see this graph skewing in this like S shape here. Today it's relatively flat, but as time goes on, if coin continues to rally or stay where it is, it's going to get more and more injurious. In other words, we have to get coin to move. And since we can't control where the stock goes, what we can control is our premium basis. So interestingly, right, if we roll this out to 465, if we roll the 150 option for September, if we take that guy and we kick him out to October, so we're buying back our September 150 put and we're selling our October put for the same strike at 150. We collect some credit. We're going to lose some theta initially, but if you take a look at the profit graph now, that S shape is still going to happen, but our theta's not going to be as drastic, right? We're still going to have positive theta here at 52 days to go. So August 27th, we've got positive theta at about 187 and change. If we get rid of this and we fast forward to August 27th, which is just with our current position, right? So our current position at 187 and change is going to have negative theta. We're going to have negative theta on August 27th with our current position. So rolling that put out in time is going to give us a little bit more time decay. It's going to allow time to continue working for us as we continue to hope that coin goes back to where we need it to go to. Now that said, for every gimme there's a gotcha, as Dr. Jim Schultz likes to say, and certainly with rolling this option out to the longer dated cycle, it's going to hold on to its delta, it's going to persist a little bit more, and we're going to get punished a little bit harder if coin actually goes down. So, and we'll get rid of the theta here, we'll switch it back to delta, and this is where, you know, the downside of rolling this comes in. We're not going to have it's going to get dicey as far as the deltas. At $156.50 we have 19 delta, but I mean just $5 more to 161 and we're short, and that's going to get just more and more pronounced as we get closer to expiration here. So just something to keep an eye on. You know, of course, the best case scenario is that Coinbase actually just falls here and then stays here. Right? We don't want coin any lower than our second short put, because then we're taking unlimited loss to zero, but we do want Coinbase between the strikes of our diagonal spread. So that's definitely something to keep in mind. And I think, like I said, I think I'm not going to place any trades right now. I know we're in a high-ish IVR environment, but I'm already over-allocated as it is from that VIX spike, and I'm just looking to, again, unwind some of my risk as the market continues to adjust. But a super good day for me. I'm very happy with how that CPI report has gone so far, and I'll just continue to keep an eye on the market. And no new trades today, no new trades yesterday. We're just sitting quietly and, you know, waiting for some of these positions to be profitable so that we can unwind them, put the capital to work somewhere else. I will see you guys tomorrow. And like I said, if you have any suggestions on content for the portfolio,